The Worth of Art: Financial Tools for the Art Market by Arturo Cifuentes and Ventura Charlin. This is a book summary. Have you ever wondered why a splash of color on a canvas can sell for more than a mansion in Beverly Hills? Or how a painting can transform from a $500 thrift store find into a multi-million-dollar masterpiece? It's a world where a single brush stroke can mean the difference between a fortune and a flop, where passion and profit dance a dangerously close tango. Welcome to the world where art meets finance. A world where beauty isn't just in the eye of the beholder, but also in the size of their bank account. Here, every painting tells two stories, one of creativity and one of capital. From Andy Warhol's silk screens to Basquiat's chaotic strokes, each piece is more than just art. It's an asset. Today, we're diving into The Worth of Art: Financial Tools for the Art Market by Arturo Cifuentes and Ventura Charlin, a book that pulls back the velvet curtain on the art world's best-kept financial secrets. This isn't just a story about pretty paintings. It's about data, strategy, and the ruthless pursuit of profit in a market where a single sale can shift millions. So, if you think art is just for museums and millionaires, stick around. Because by the end of this video, you might just see that dusty painting in your attic a little differently. Art has a dual nature. It's both an object of beauty and a financial asset. Just like stocks or real estate, art can be bought, sold, and, most importantly, invested in. But here's the twist. The art market is not like Wall Street. It's secretive, complex, and sometimes downright bizarre. In their book, Cifuentes and Charlin reveal how the art market is a realm of paradoxes, a place where opulence meets opacity. Prices can skyrocket overnight, not just because of an artist's skill, but often due to a cocktail of hype, market manipulation, and sheer luck. A painting's value can hinge on the whims of a billionaire, the timing of an auction, or even the colors used on the canvas. In fact, they tell the story of a Basquiat painting that sold for $10 million at Sotheby's, over 10 times its original estimate. The reason? A heated bidding war between two collectors who simply refused to back down. Cifuentes and Charlin take us on a journey that combines finance and art, showing us how to decode the prices of paintings and uncover the hidden patterns that influence their value. They argue that art's worth isn't just about its aesthetic appeal, but also its financial potential. And here's the kicker. They do it all using data. That's right, spreadsheets, algorithms, and financial models usually reserved for hedge funds and bond traders. Cifuentes and Charlin reveal that the art market moves in mysterious ways. Unlike stocks, which are traded every second, paintings can disappear for decades before reappearing at auction, sometimes with jaw-dropping returns. One example from the book is a Renoir painting that sold for $12,000 in the 1950s and reappeared 50 years later to fetch over $5 million. But here's the wild part. Art's value isn't just about what's on the canvas. Provenance, the painting's history, can make or break a deal. A Picasso with a dodgy backstory might struggle to sell for half its worth, while one with impeccable provenance could fetch tens of millions more. The future of art isn't just about oil and canvas, it's about data and blockchain. Cifuentes and Charlin speculate about a world where every brush stroke can be authenticated, every sale tracked on a decentralized ledger, and every piece of art tokenized for fractional ownership. Imagine owning a slice of a Monet just like you own shares in Tesla. In this brave new world, collectors aren't just art lovers, they're investors armed with algorithms. The authors reveal how artificial intelligence is already being used to predict trends, authenticate paintings, and even forecast auction results with surprising accuracy. The art market, it seems, is no longer just about passion, it's about precision. So, is investing in art a ticket to riches or just a billionaire's playground? According to Cifuentes and Charlin, it's both and neither. Art can diversify portfolios and offer protection against inflation, but it's also unpredictable and illiquid. In short, it's not for the faint of heart or wallet. If you've ever stared at a modern art piece and thought, I could do that, remember, in the art market, what you paint doesn't matter nearly as much as who's willing to buy it and for how much. The Worth of Art isn't just a book, it's a map through the labyrinth of the art market. a world where passion and profit collide in the most unexpected ways. So, whether you're a Wall Street wolf or an art world newbie, this book proves that beauty and bank accounts can go hand in hand. If you thought pricing art was all about intuition and flamboyant gallerists throwing around numbers, think again. The art market might seem like a chaotic whirlwind of subjective opinions, but according to Cifuentes and Charlin in The Worth of Art, there's actually a method to the madness, a financial method, to be precise. They break down 3 key ways to decode the value of art with the precision of a Wall Street analyst. 1. Repeat sales approach. Imagine this. A painting by Jean-Michel Basquiat sells at auction in 1990. Fast forward 15 years, and it reappears under the hammer, selling for triple the price. This isn't just a lucky break, it's the repeat sales approach in action. By tracking the same artwork sold at different times, this method reveals how much a piece has appreciated over the years. But here's the catch. Not every painting that comes back to auction follows a neat upward trajectory. Some fall spectacularly flat. In the book, Cifuentes and Charlin highlight how even renowned artists like Renoir can have pieces that fluctuate wildly in value, depending on timing, market sentiment, and sometimes sheer luck. It's a bit like watching stocks rise and fall, except the ticker symbols are priceless masterpieces. 2. Hedonic pricing models. Now, what if I told you that a painting's price could depend not just on the artist's fame, but also on the colors used, and even the orientation of the canvas? Enter the hedonic pricing model, a technique borrowed from real estate that evaluates art based on a mix of factors: the artist's popularity, the painting's size, its subject matter, and even seemingly trivial details like whether it's a portrait or a landscape. Cifuentes and Charlin share a fascinating insight. Blue paintings, on average, sell for more than red ones. Why? Because blue evokes calm and trust, 2 things that apparently open wallets faster than you can say money. They also reveal how paintings featuring women or iconic scenes often command higher prices due to their universal appeal. It's almost like the art market has its own set of cheat codes. 3. Price per square centimeter. Yes, you heard that right, breaking down a painting's worth by each square centimeter. It sounds like a joke, but it's actually one of the simplest ways to spot trends and uncover hidden gems. By dividing the sale price by the artwork's size, Cifuentes and Charlin show how to cut through the noise and find out if you're paying for the art or just the brand behind it. Take the case of 2 Warhols, one massive canvas covered in dollar signs and a smaller, subtler portrait. Using the price per square centimeter method, you might discover that the smaller piece offers a far better deal, especially if the larger one is inflated by hype. It's art flipping made easy, 1 square centimeter at a time. But here's where it gets spicy. While some artists' work skyrocket, others crash just as fast. For instance, Cifuentes and Charlin tell the story of 2 Basquiat paintings sold years apart. One soared in value, while the other plummeted. It's a high-stakes game of art market roulette, where even blue-chip artists can lose their luster overnight. The reason? Sometimes it's the quality of the artwork, but more often than not, it's the story behind it, the provenance, the previous owners, and even the gallery that sold it. It's a world where perception is reality, and one scandal can send prices tumbling faster than a stock market crash. But art isn't just about buying and selling, it's about leverage. Literally. The book reveals the secrets of art-backed loans, where collectors use paintings as collateral to secure millions in financing. Imagine pawning a Picasso to buy stocks, or even more art. Here's how it works. A collector pledges a painting to a lender who offers a loan based on a fraction of its appraised value, usually 40 to 60%. It's risky business for the lender, especially when you consider that art prices can swing wildly. Cifuentes and Charlin describe a jaw-dropping case where a collector borrowed $10 million using a monet as collateral, only to default on the loan when the market dipped. The lender was left holding a painting that had suddenly lost half its value. Talk about a plot twist. And then there's the world of auction guarantees. If you thought Wall Street's financial maneuvers were complicated, wait until you hear about auction guarantees. Picture this. An auction house promises a seller a minimum price for their painting, regardless of whether it sells. If the bids don't reach that amount, The auction house has to cover the difference out of its own pocket. But that's just the beginning of the intrigue. Cifuentes and Charlin explain how hedge funds and private investors often step in to take on these guarantees for a fee, gambling that the painting will sell above the guaranteed price. It's a high-risk, high-reward game where fortunes can be made or lost before the gavel even falls. One famous example? The $450 million sale of Leonardo da Vinci's Salvator Mundi at Christie's, a painting that came with a hefty guarantee from a third party. The twist? Some experts still debate its authenticity. It's a perfect example of how, in the art world, perception is often more valuable than the truth. In the end, the art market is a place where beauty meets balance sheets, and masterpieces can turn into million-dollar mistakes. But for those who understand the game and have the stomach for its wild swings, the rewards can be priceless. Cifuentes and Charlin's The Worth of Art isn't just a guide to investing in art. It's a behind-the-scenes look at a market that's as thrilling as it is treacherous. So, next time you see a painting with a jaw-dropping price tag, remember, it might not just be about what's on the canvas, but the financial masterpiece behind it. But wait, the plot thickens. The art market isn't just getting richer, it's getting smarter. Imagine a world where an AI can tell you if a Basquiat is about to skyrocket in value or crash and burn just by running a few simulations. And then there's blockchain, the digital ledger that's turning the art world upside down. In a market notorious for its secrecy, blockchain is like a spotlight in a dark room, illuminating the path from one collector to the next. Cifuentes and Charlin describe how blockchain can authenticate every transaction, ensuring your Warhol isn't a fake and your Monet isn't money down the drain. In fact, they tell the story of a collector who bought a Picasso for millions, only to discover it was a masterful forgery. Today, that same mistake might have been avoided with a quick blockchain verification, a digital certificate of authenticity that can't be tampered with. But it gets even crazier. The authors delve into the rising trend of NFTs, non-fungible tokens, essentially digital certificates that prove you own a piece of art, even if that art is just pixels on a screen. From Beeple's $69 million digital collage to virtual galleries in the metaverse, NFTs are transforming how we think about ownership and value. The book speculates that soon we might see fractional ownership of masterpieces. Imagine owning a 0.001% share of a Monet, just like you would a stock. The future of art isn't just bright, it's digital. And it's arriving faster than a paddle raised at Sotheby's. Art can diversify portfolios and offer protection against inflation, but it's also unpredictable and illiquid. Unlike stocks, which you can sell with a click, a Picasso can sit unsold for years. And when it does sell, fees and commissions can eat up to 30% of your profit. Talk about a hidden cost. A book compares the art market to high-stakes poker, where the real skill lies not just in having the best hand, but in knowing when to play it. A painting might fetch millions today, but if the artist falls out of favor or if a scandal erupts, values can plummet overnight. Cifuentes and Charlin recount the cautionary tale of a collector who splurged on a Damien Hirst piece, only to watch its value drop by 50% when the market turned cold. It's a brutal reminder that in the art world, even the bluest of blue-chip artists can leave you feeling red. But it's not all risk and ruin. For those who can navigate its complexities, the art market offers unique opportunities. During financial crises, when stocks nosedive, certain artworks have soared, offering a safe haven for the well-heeled investor. As Cifuentes and Charlin point out, it's a market where sentiment and scarcity are just as powerful as supply and demand. In other words, investing in art isn't for the faint of heart. The Worth of Art isn't just a book. It's a blueprint for anyone who's ever dreamed of turning their passion for art into profit. In art, as in finance, knowledge is power. The more you understand about what drives prices, the better your chances of finding that hidden gem or avoiding a financial fiasco. So whether you're bidding at Christie's or browsing a local gallery, keep your eyes on the canvas and your hands on your wallet. If you enjoyed this dive into the art market's financial secrets, don't forget to like, subscribe, and hit the bell for more videos. Until next time, may your investments be wise and your walls well decorated.